Palantir just announced an insane partnership again today. However, the market just turned sideways. Palantir price crashed massively, spreading fear and doubt to everyone. However, there's a sign of hope rising. The $1,000 mark is closer than you think. But what is actually happening? Is there any confirmation for it? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir is proving once again that it's unstoppable. Today, the company unveiled an exciting new partnership that's making waves. Elliston Corporation, a leader in construction services, has announced that it's teaming up with Palantir Technologies, the powerhouse in data analytics. Thanks to Palantir's cutting-edge AI and data analytics platform, Elliston is transforming the way it operates. The partnership is all about streamlining processes, boosting efficiency, and setting the stage for major growth. Elliston's CIO, Brandon Milner, shared just how impactful this deal has been, saying, "We are thrilled to finally announce this agreement with Palantir Technologies. This partnership has helped us achieve significant progress in our long-term strategic goals and position the company for continued success in the highly competitive construction technology industry." This is huge for Palantir. It's another big step in showing the world how their technology isn't just for tech companies or government contracts, it's reshaping industries like construction. Each new partnership like this solidifies Palantir's reputation as the go-to solution for solving tough challenges and delivering real results. However, behind all the excitement, there's something brewing, and it's not good. Palantir's stock price just took a nosedive, falling from around $79 to $75 in a blink of an eye. It sent shockwaves through the market. Fear spread like wildfire, and investors were left scrambling, wondering what went wrong. But why is this happening? What's causing the chaos? Well, if you've been keeping up with us, especially if you watched our last video, you might already have a clue. But for those who missed it, here's the deal. Just yesterday, Jim Cramer, one of the loudest and most recognized voices in the stock market world, dropped a tweet about Palantir. He was hyped, saying bullish things about the company and announcing that he's going to start buying shares. Sounds like a win for Palantir, right? Not so fast. If you know anything about Jim Cramer, you know his bold predictions have a reputation for going sideways. It's almost become a meme at this point. The internet has latched onto the idea that whatever he hypes up tends to do the opposite. So when Cramer gets bullish, some investors take it as a bad omen. And here's more. But that wasn't the only hit Palantir took yesterday. Morgan Stanley stepped in and dropped a massive bombshell. They slashed their price target for Palantir to $60, calling it underweight, which basically means that they think it's overpriced and likely to underperform. That kind of news is hard to shake off, especially when it comes from a heavyweight like Morgan Stanley. And now, today, we're seeing the ripple effects. Palantir's price is crashing, investors are panicking, and the sell-off is gaining momentum. It's a tough moment for the company and its supporters, and the fear in the market is all too real. But here's the kicker. The ripple effect isn't just hitting everyday investors. It's shaking up the bigger players too. Just now, a Twitter user revealed something that's hard to ignore. One Palantir insider has reportedly sold their shares for a jaw-dropping $36 million. That's no small move. It's a loud and clear signal that even those on the inside are feeling the heat. If they're jumping ship, it only adds fuel to the fear that's already spreading like wildfire. This isn't just a dip. It's turning into a full-blown storm. Because of all this chaos, the speculation is running wild. One Twitter analyst even predicted that Palantir's price could drop all the way to $50 before it has any chance of recovering. Others are jumping in, saying the stock is a massive bubble. And even if it were to lose half its value, it would still be overpriced. It's a tough look for Palantir right now. The company might be making big moves and signing groundbreaking partnerships, but the market isn't forgiving. The hype, combined with high expectations and sudden doubt from insiders and analysts, is putting enormous pressure on the stock. It's like watching two sides of Palantir's story clash. The unstoppable tech giant pushing industries forward versus a market that's unsure if it can live up to its own price tag. Right now, the fear is winning out, and it's dragging Palantir's price down with it. But wait, hold on. There's still a glimmer of light at the end of this tunnel. While fear and sell-offs dominate the headlines, some analysts are saying this drop is just a temporary hiccup. In fact, they're predicting that Palantir is being positioned for jaw-dropping price targets, some even as high as $1,000 per share. One particularly bold Twitter post from an analyst caught everyone's attention. It said, There is zero downside impulse in Palantir left. We may see a shallow retracement to 70 or 75, but then we're headed to Valhalla. $100, $125, $150, $175, and $200 are the immediate targets. After that, $250, $500, and $1,000 are possible this cycle. The confidence in this tweet is hard to ignore. The idea is that Palantir might just be pausing before a massive climb, with short-term corrections paving the way for explosive growth. The analysts' predictions reflect the belief that Palantir's underlying strength, its game-changing tech, and growing partnerships will outweigh the current panic. It's a wild contrast to the doom and gloom we've seen recently, but this optimism speaks to the polarizing nature of Palantir. It's either seen as a bloated bubble on the verge of bursting or a rocket ship ready to shoot past the stars. Right now, Palantir feels like it's caught in a tug-of-war between fear and hope. The next big moves could redefine its trajectory, and for better or worse, the market is watching closely. Speaking of big moves, here's something you'll want to hear. Palantir's partnership with NHS England is still going strong, and it's making waves in the healthcare space. A few months back, NHS England confirmed that Palantir would lead the development of its new Federated Data Platform, or the FDP. This is a massive deal, running for 7 years and valued at hundreds of millions of pounds. The FDP is designed to connect data across hospitals and care systems in England. It's about linking things like patient records, waiting lists, and staff schedules to improve care and tackle challenges like surgery backlogs and patient discharges. Each hospital gets its own version of the platform, but they're all connected under the same system, creating a seamless flow of information. And just today, the NHS revealed its elective care reform plan for the next couple of years, and guess what? Palantir is at the core of it. Amanda Pritchard, the NHS chief executive, called the FDP vital for using AI to improve healthcare. Right now, nearly 90 hospitals are using the platform, with plans to expand it to almost full coverage within the next few years. This partnership is a massive win for Palantir, showing how their technology isn't just helping businesses, it's reshaping industries like healthcare. Despite the turbulence in the stock market, deals like this highlight why Palantir is such a major player in the tech world. So, despite all the noise, fear, and dramatic moves in the market, there's something important to keep in mind: Palantir's long-term potential. One Twitter user summed it up perfectly. There's only one company with enterprise software that works, that governments and corporations can depend on to solve their hardest problems. Soon the world will understand. If you're not first, you're last. What they're saying is simple but powerful. Palantir isn't just another tech company. It's building tools that are essential, tools that governments, corporations, and entire industries rely on to tackle challenges no one else can handle. When the stakes are high, Palantir delivers. And that's why it's hard to bet against them in the long run. Looking ahead, this moment could define Palantir's story. Yes, the stock is going through a rough patch, but the company's work, whether it's transforming healthcare with NHS England or helping businesses like Elliston reach new heights, is creating value that will ripple out for years. For investors, this is the kind of company that rewards patience. The market might swing wildly, but as Palantir keeps proving its worth, those who hold steady could see incredible returns. And on a bigger scale, Palantir's impact is shaping the future, streamlining industries, saving lives, and solving problems that once seemed impossible. In the end, the noise will fade, but Palantir's legacy will only grow. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.